this is bad news. When the traders learned this, they immediately sold gold. Oh my God, China stopped buying. I mean, it's 1 month. So what? I mean, as far as I'm concerned, that's a bullish announcement, I think, because if gold made a record high on Friday, or in May rather, without the Chinese buying anything, to me, that's pretty bullish, because normally the Chinese have been buying, and even without the Chinese. Now, of course, when I say the Chinese, I mean the government. Obviously, Chinese people, the people themselves, didn't stop buying gold. I'm sure they bought plenty of gold, but the government didn't buy any gold for that month. But even without the government buying gold, gold made a new all-time record high without China helping. The markets have just given China a gift, not only because the market fell $40 on the news that China didn't buy any gold in May, giving them the opportunity to buy more gold now in June.
China's central bank, the People's Bank of China, PBOC, paused its gold buying in May, concluding an 18-month spree of continuous acquisitions as spot gold prices soared to record highs. Despite the pause, the value of China's gold reserves rose, mirroring the elevated market prices. At the end of May, the reserves remained steady at 72.80 million troy ounces, worth $170.96 billion. This halt in gold purchases coincided with a 1.4% decrease in spot gold prices, falling to $2,342 per ounce, a drop influenced by a previous rally. PeterSchiff, an American stockbroker, financial commentator, radio personality, and CEO and chief global strategist of Euro-Pacific Capital, is still bullish on gold and silver, and believes that the recent announcements are part of a strategy to drive investors away from gold and silver so that the Chinese government can buy more precious metals at lower prices. Schiff argues that there are 3 reasons. One is the U.S. Federal Reserve rate cuts this year. The other one is that China paused gold purchases in May after 18 months of buying. And the last one is the U.S. employment data came in better than expected. PeterSchiff recently appeared in an interview on his YouTube channel. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Friday turned a lot of people who may have gotten bullish on gold in the last couple of weeks bearish. And that's probably exactly what the Chinese want, right? If the Chinese started this sell-off just by announcing a 1-month hiatus, from buying gold, and that was enough to get the new buyers to throw in the towel, well, now that's more gold for the Chinese to buy. And they got a lot of gold that they need to buy. So many people that maybe just bought into the market in the last week or two who are now gone, right? And just thrown up their hands in disgust, right? Maybe gold will have to be well above 2,500. Silver might have to be 35 or 40 before some of the people who just bought, right? Some people finally just saw the move up in silver and they bought in at maybe 31 or 32, and now they just sold out at 29. They took a loss and they said, that's it. It's over. I'm getting out. And maybe some people actually got short. They're going to be in for a world of hurt in this next rally. I read a lot of articles. A lot of people think that there's going to be a lot more selling coming. Next week we get the FOMC meeting. The Fed is not going to cut rates, obviously. They're going to talk. Most of these press conferences have been very bearish. Very dovish. And so we could see a big reaction in the gold market, in the foreign exchange market next week that completely reverses what happened this week. But you still have a lot of people that just assume that the sell-off that started on Friday is just going to continue. It may continue for a day. Maybe we go down again Monday or a little bit Tuesday. But again, this is going to be, I think, short and sweet. This is a huge bull market, and people are not going to have an opportunity to buy that big a dip. I think what we just saw is about all the opportunity you're going to get. But what these declines do is they're not enough to give the bulls a really great buying opportunity. They're just enough to scare the week longs and to prevent other people who were considering getting into the market from taking a position because they get scared. And it probably emboldens the shorts, and it probably encourages people to enter the market from the short side. But you're not going to get a big enough dip for the longs, for the bulls, to get a really good sale. I think, these are short and sweet opportunities, and most people will miss them because the market pulls back, and then you're hoping that, okay, maybe we'll get a bigger pullback. I don't want to buy just yet, and the next thing you know, the market's running off to new highs. So I wouldn't expect there to be much downside below where we are now. And again, as I said on a prior podcast, I think 30 for silver is what 2000 was for gold. I think now that we've gone through 30 an ounce, 30 is really the support. Again, we could trade below it like we are now, 29.50, just like gold went below 2000 many times before it went to 2400 and hasn't gone anywhere near 2000 since. I think silver is in that early stage. We just blew through 30, which was resistance for many years, which is now relative support. And I think any dip below 30 is an excellent buying opportunity. And I wouldn't press my luck looking for, 28 or 27. I think the time to buy those prices has passed. I was trying to get people to buy silver when it was under 25. But if you didn't buy it when it was under 25, you could still buy it now under 30. 30 is still a big pullback from 50.
After the announcement, gold prices trimmed losses to nearly $2,295 despite the stronger U.S. dollar on Monday during the early Asian session. The yellow metal edges lower to one-month lows on Friday amid lower bets on U.S. Federal Reserve, Fed rate cuts this year, and bearish sentiment fueled by news indicating that China paused gold purchases in May after 18 months of buying. The U.S. employment data came in better than expected, prompting traders to push back the expected timing of Fed rate cuts. On Friday, the U.S. non-farm payrolls, NFP, for May, rose 272,000 from a 165,000 increase in April, revised from 175,000. Meanwhile, the unemployment rate increased to 4.0% in May from 3.9% in April. The U.S. dollar attracts some buyers in response to the more robust data and weighs on the gold price, making bullion more expensive for overseas buyers. Economists generally agree that Friday's strong May job report seemed to nix any rate cut at the July meeting. Pollock said Fed Chairman Jerome Powell is expected to repeat that the Fed is no closer to gaining confidence that inflation is moving back to target. Since last July, the Fed has kept its benchmark interest rates at 5.25 to 5.5%. Powell is expected to stick to the message that this rate puts enough downward pressure on inflation to slow demand, but needs to be held tighter for longer to cool inflation. Now, let's get back to the interview.
The Fed has basically taken additional rate hikes off the table, and they're preparing the markets for rate cuts, even though inflation is nowhere near 2%. And if you look at the fiscal situation, that argues for much higher inflation. Look at what's happened in commodities. The recent correction, we've had a bit of a correction in the last week in copper prices, in oil prices. But year to date, we still have considerable gains in those commodities. And there are other commodities that are continuing to move higher. So the overall price level has got a lot of pressure. And so all of the anecdotal evidence would suggest that inflation is on the rise. Yet the central banks are either cutting rates or preparing the market for rate cuts. All that is actually very bullish for gold. It's not bearish, it's bullish. The central banks have surrendered, right? They're not fighting the war. They've already conceded defeat. They just can't come out and admit that. And so they can still pretend. And as long as the markets are willing to accept this pretense, because so far nobody, other than guys like me, nobody in the mainstream is pointing this stuff out. So everybody is just accepting this. But where they're going to be tested, where the credibility is going to be lost, is when the inflation numbers take a decided move higher. And now the central banks are really between a rock and a hard place. The stock markets, the bond markets, real estate markets. I mean, it's going to be a bloodbath when the central banks pivot, or if they pivot and start hiking. I guess none of this is priced in to financial assets. And certainly, the U.S. with an election coming, there's just no way that Powell is going to hike rates before the election. It's just not even possible. even if the inflation data worsens to the point that it's obvious that hikes are necessary. And so that's where I think the credibility is on the line between what the Fed says and what the Fed does. And when will the central bankers be forced to accept that inflation is not going to go down to 2%? That maybe 3% is okay. And of course, if they're willing to lower the bar to 3, well, what about 4? Once you change your target, it's no longer a line in the sand, right? So if the central banks say, well, we're going to go from 2 to 3 or 2 to 2.5, whatever, especially after saying for so long, 2% is the target, 2% is the target, trust us, it's 2%. The minute they change it to a higher number, that new number has no credibility. It has even less credibility than the old number. And I think what happens is when the central bank is forced to abandon its target, that is a warning sign. And that is what's going to result in a loss of confidence in dollars or euros or other fiat currencies, a loss of confidence in sovereign debt, and it's going to cause a stampede into gold, into silver, into real assets, into emerging markets.
What are your thoughts on PeterSchiff's bullish prediction of gold and silver, the Friday drop in the precious metals prices, the China announcement, and the upcoming FOMC meeting? Drop your comments in the comment section below. If you find this video informative, remember to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.